Welcome you all to VTU Online Education. I am Dr. Shanta Porapur, working as Assistant Professor in VTU in MBA department. And already I have explained Module 2 in the Entrepreneurial Development in your course. Now I would like to continue with the Module 4 here. See, in the Module 4 it is talking about the succession planning and the strategic for harvesting and ending the venture. So, the exit policy for the businesses is going to deal with in this model. These are the outline of the course: succession planning, transfer of family member, transfer of non-family member, option of selling the business, direct sale here, employee stock option plan, management boycott, exit strategy ethics involving employees and business associates, social responsibility of businesses. So, these are all the aspects we are covering in this model. Here in the exit policy, that is what exit strategy that the employer will need to consider. It has to be considered at the time of starting the business itself, okay, and these decisions can involve finding a successor to the venture, selling the business either totally or partially, or ending the venture because of bankruptcy. All of these likely scenario for real and common among small businesses. Thus, to be prepared, the entrepreneur should be understand each of these issues and be prepared with the exit plan before it is too late. On of the venture ending decision here, that an entrepreneur may face is succession of the businesses. So, here because of these are all the reason we should have to be think properly for the winding up the businesses or the exit from the business here, and it is a common with the many of the businesses. They can go for a this thing exit from the business, but choosing the right person to give it the transfer the what is that ownership is most important. Here the exit policy is talking about the how to transfer the ownership to the other person or the right person here, that all the things is here in this side. And if the business is family owned by the family, then the entrepreneur would likely seek a family member to succeed, or other than option is that if no family member is available or interested, include for transferring some all or all the businesses to an employee or outsider or hiring an external person to manage the businesses. So, if the family member is there, they can give it to the family member, otherwise they can transfer into the non-family member who is interested, okay, or among the employees they can transfer their businesses. Direct sale of the business, employee stock option plan is also available here, and management buyout are alternatives for the entrepreneur in selling the venture. So, these are the other options also there here. If they want, they can give it to the family members if family members are interested, otherwise if they are not interested and not available, then they can go with a non-family member. If that is also not possible, also they can give it to the employees here. Okay, and if that is also not possible, they can go directly selling the business, or they can sell it to the employee stock option plan, that also they can use it here. And management buyout is another alternative, they can sell it. These are all the exit strategy. Option is with the entrepreneur here. Here the very early plan is needed to minimize the crisis, that is very important. And even though the intent of all the entrepreneur is to establish a business for a long time, yes, of course every businessman is having intention to start the business to run it a long time, but now most of the time it is not possible, the plan may fail or it is not possible to continue the business. In that time they can transfer the ownership here through many methods here, that what I said in the earlier aspect. Since about one half of the new ventures fail in their first year, first 4 years of the businesses. This is the scenario that what we can say. For what is that? 1/2 of the businesses are fail to run the businesses within 4 years itself. Means the beginning problem, the only few people are sustained in the market with a well plan only. That's what in the business model and all I explained about the business model, how important it is and how to go with the business plan. how we should make the business plan strategically, that all the points comes here. See, if they are not able to run the business, if they are not clear with the business plan, or their product or their service is not able to sustain in the market, then they can wind up, or they can transfer the ownership here to the somebody else who are really ready to do it that. So half of the businesses are facing this problem. It means that the proper business plan is not ready with them. So there are many reasons, not only that one, there are many reasons are facing by the businesses, because of the competition, because of the availability of the product, many competitors, and because of the consumer interest towards the product. That all matters here. Because of all the reasons here, this can be phenomena with the small businesses. Then we need to go with the succession planning. Some tips before going to the succession planning, we should have to understand here what are the tips need to be considered. First, I would like to tell you what is succession planning. Succession planning is nothing but transferring the ownership to the right person. It may be family member or outside the person. So transferring the ownership is, we can call it as a succession planning. So before going to the succession planning, they have to have some tips with them. The first is that allow sufficient time for the process by starting early. So when they have decided to exit the business, then that decision should not be taken immediately. That has to have a sufficient time here. They have to take a sufficient time in all the possible ways. They need to check it here. So that is one here. And estimate the firm's value or hire a consult to do it for them. So that is another one. If they need it, they can call the, what is that, consultant. They can take the help from the consultant. For this, to evaluate the organization, they can take the help from the consultant. The respective consultant will help them to make the value of their organization. They, as a person, may not be, as a businessman, may not be able to find the value of the organization or the value of his business. So here they can go with the consultant here. Evaluate potential successor on their merit, none on whether they remind you or yourself. See here, this is a very important aspect here. They have to select the potential successor for his business, because business is not just a business, it is like his own baby. Whenever we start the business, we start with the full of energy, full of efficiency, and full of feeling. Our feeling and our emotions are attached with the business. So when we have started like that, we have to able to find it out the right person who can capable enough to run the business further level. So finding the right person on basis of merit is most important, rather than the person who is impressing you. So that is what important here. If the family member are being considered, make sure they have the skills and motivation necessary to carry on the businesses. So when you are this thing made and get the progress like a baby, then you have to think of it. In your family member, if you want to transfer your business, then what has to be done? You have to check their skills level and check their motivation. What motivation they are taking? Just as asset they are taking, or just because of the skill set what it is needed they have, or not, need to be checked it here. So if they are really deserve to take the leadership, then only we should give it to the family member. Provide a transition period so that the successor can learn the business. So here transition period is most important. The person who is going to lead the organization future, that person at least spend some time with that organization. He has to check what is happening and what is the problems that the organization is facing, how to solve it, and all the related information has to be gained. That all the knowledge has to be gained by that person. So transition period has to be given to the person who is going to handle the organization. Consider options such as employee stock option plans for a management succession. So here the one of the option is that employee stock option plan, that you will understand later. It is there what exactly it is. Stock employees option is the best plan here. This also need to be considered while making the succession planning. Set a date for completion of the transition and stick to it. So here when you are going to transfer the leadership, that transition date has to be decided here. Within that transition date, That means the whatever the transition time you have given to the person here, that person should learn, and all the things has to be done within the particular time what you have decided. So this is all the tips needs to be considered, and with the help of these tips we can go with the succession planning or the succession of business. So the first one, succession of business, the first one is transfer to family members. So the leadership is, you are going to transferring your leadership to your family member. That is what the first one here. So then here we need to be clear with the role of the owner here, whether it is a full time or part time or the partial of the work you are transferring, or what exactly, or totally the retired, that all the points has to be understand here. See, it is a full time, then you have to define it a full time, part time, that all the retired time period, that all the things has to be clearly mentioned, and clearly understand and come to the conclusion in that matter. And family dynamics, here the family dynamics need to be understand. According to family dynamics need to be take the decision. Income for working family members and the shareholders. So the income, the who are the family members working in that particular business, what is their income, it has to be decide, and what is the income to the shareholders has to be decide here. Means the percentage of profit has to be decide. Transition business environment, so that the transition business environment has to be conducive, and here it is need to be considered. A treatment of loyal employees, the treatment of the loyal employees, whenever you are transferring your family member, that the next person who is coming to the place, that person treat their employees are the loyal to the organization. How you treated the same way, that what is that emotions has to be carried forward by the next person. Tax consequences, what are the things are there, taxes related, all the aspects need to be clear here. So this is what family transfer. When transfer to the non-family member, when we are transferring non-family member, in that situation train a key employees and retain some equity. So some equity has to be retained to the employees. This comes in the ethical practice also. So here they have to retain some equity to the employees and to train the employees for the next leadership. So sudden if somebody comes and taken over the organization, he is not good with the employees engagement and job satisfaction of the employees will be hit here. So the reason here, the before going to what is that succession of the business, what you have to do, here the businesses has to train the employees for the next leadership, and retain control and hire a manager. Retain the employees as much as possible, okay, control and the hire a manager. Here the whatever the needed managers are needed, that all the hiring process and all the controlling system and retaining the employees has to be done here. Sell the business outright. So here they have to sell the business to the outright person, who are the really deserved person, that person can purchase the here business here. You can go for the selling here. So these are all the way the non-family member can take the lead here. And next, options for selling the business. The next the one is succession plan business, succession of the business, and that comes the family member succession or the non-family member succession. Here the next options comes here is that option for the selling the business. So some of the options are there here to sell our business. In that, the first one is that direct sale. Directly the owner of the organization can sell the business here. The strategy to be considered while selling the business, focus on the narrow, well defined segment. So they have to focus on not in the broader perspective. Here they have to focus on the narrow what is that area, means they have to make it a specific selling. So for that, here they have to focus on the narrow and well defined segment. They have to find a well defined segment to the sell it, means the who are the purchaser, who are the buyers. In that they have to segment it properly. All the buyers need to be segmented here properly, and they have to find it the very specific people, the who are really able to purchase or who are able to run their business in future well. That way they have to find the here person. Control cost and the focus on the higher margin and profits. Control cost and focus on the higher margin and profit. So while selling the business, we have to concentrate on the cost, selling cost here. we have to overcome the selling cost and try to get the more margins and the profits here, get all the financial statement in order. So while selling the direct selling, so we have to be careful as a seller, we have to be, as a business owner, they has to be careful all the documents which is needed, because in any moment that agreement between seller and buyer can be cancelled. Why? Because of the lot many documentations. So the reason here, while selling, the seller or the person who is going to sell directly in the market, that person should be here very clear with all the financial documents, and that all documents has to be keep it in order. So when they are keeping it in order, it is very easy to they provide all the documents to the buyers here. Prepare a management documentation. So management documentation, what are all needed, all the documents has to be prepared properly, and the already existing they have to keep it order, and which are the management documents are needed, they have to prepare it well and systematically according to again rules and regulations here. Assess the condition of capital equipment. So they have to assess the condition of capital equipment, whatever the capital equipments are there, the condition of those, all the capital equipments needs to be assessed here. Get tax devices, all the tax devices has to be with them. Get non-disclosure from key employees. So some of the key employees in the organization, they are keeping with some of the confidential data, some of the important positions. So the non-disclosure from those is most important here. So that document has to be keep with them. Try to maintain a good management team. So while selling, while direct selling to your organization, so you have to maintain the good management team with you. Otherwise what happens, bad mouthing starts, and if the bad mouthing starts, then the buyers will get lot of doubts to buy your business. So here you need to have a good management team with you to sell your asset. Prepare and plan in advance. So this is very important when going with a direct sale option, because you are directly selling your organization, all the necessary things, wherever some knowledge is needed. Whenever we are selling the organization, here there is a lot of knowledge is needed, legal aspects, ethical aspects, and all the social aspects, and the value of the asset, that what is you have, that all the estimations is needed here. So when you are going to sell directly, then preparation in advance is most essential here in this matter. And options of selling is again continued here, and important consideration is type of payment the buyer will use, what type of the payment method they can go with to go with a buyer here, that needs to be clear. So for that you need to be have an idea, proper idea, and you have to guide them properly here. Business broker may be helpful in this matter. Business brokers, you are selling directly, but business brokers help, you can take it in the direct selling method. The best way to communicate the business to potential buyers is through the business plan. So that's what I said in the earlier slide also. Business plan, by having the well defined business plan, you can communicate with the potential the way you can communicate to the buyers here. The role of an entrepreneur may vary depending on the sale agreement or contract with the new owner. So the role of the entrepreneur may vary, because here because of the here the new owner is entering, and according to the new owner's agreement, here the things can be changed in the organization. So these are all the points comes in the direct sale. And next option is that employee stock option plan. So this is another one, establishes a new legal entity. So it is nothing but here they can go with a new legal entity, an employee stock ownership trust. So by making the employee stock ownership trust, we can create a new legal entity here, obligates the firm to repay the loans plus interest out of the business cash flow. Means here this the employee stock ownership trust, the whatever you are making, this trust will taking care of all the loans and all the interest, whatever that organization is having the obligations, that all need to be stick on to this trust, and result in significant stock value for the employees. So this is another important aspect comes here, the result in significant stock values for the employees. The whatever the significant stock values are there, that is for the employees here. Means employees, the employee stock ownership trust has been created with the here in the employees, all the employees here. So this trust is taking care. So all the stock values will be the employees here. So in this way, this is important. And advantages here, it motivates the employees to put in extra time or efforts, because here in the if somebody else is the owner, then the employees will be behave like employees, but here employees are the owners, just they are making the new entity, new legal entity in the name of the trust, employees trust. So in that situation, automatically employees will put a lot of effort, then they will try to overcome the whatever the burden that organization has. They will put extra effort and extra time. They will try to come up with that all the problems here. So in this way, this is one of the advantage. Provides a mechanism to pay back loyal employees. It provides to the payback to the loyal employees in the organization. Who are loyal employees in the organization, they are getting the payback here. That mechanism can be developed here, and allows transfer of business under a planned written agreement. So transfer of business under the planned written document, this can be possible. In this way, this is one of the advantage, and merits the company to reap the advantage of deducting a contribution on ESOP or any dividends to paid. So this is another merit here with the what is that selling option, employee selling option. So in this way, that is another the option we have understood in the options of selling the business here. The next option in the selling the option for selling the business is management buyout. So management is buyout is nothing but it is usually involves in the direct sale of the venture for some predetermined prices. So already decided prices, it is comes under the direct sale. To establish a price, the entrepreneur should have these are the ideas, have an appraisal of all the assets they have to have with them, and determine the goodwill value established from the past revenue, that all the goodwill whatever the value they have, that all the things has to be established. And here the sale of the new venture can be for cash, for cash they can sell it, for financial through the financial banks, that also way they can sell it, and through sale of the voting or the non-voting stock, by this way also they can sell it. The entrepreneur may agree to carry a note here. So these are all the points comes under the management buyout. So this is another way the organization can be sell in the thing. So these are all the ways the organization can go for the exit strategy. Okay. So these are the sources I have collected the material, and I have prepared the PPT. The further more aspects also there, you can go with these sources and get the more information also here. And according to syllabus, I have prepared the PPT. And next aspect is that exit strategy ethics. Here exit strategy ethics comes under here. They have to consider three important aspects. The first one is the employees of the organization. They have to ethically consider the employees here. This includes making sure that employees are treated well, and customer are not left in the bad situation, because when they are transferring the ownership in that situation, they should not leave the employees as it is the state. They have to treat the well employees and plan it properly for the employees safety and security for the future, so that all the things needs to be considered. And while winding up, they have to give the importance to the employees through notices, and they have to inform well to the employees. So if they wanted to continue with the same organization, they can continue, otherwise they can jump into the other organization where they get the job security and financial security. So in this way, they have to inform well to the employees first. So it is again left on the employees. If they want to continue, they can continue with a new leadership, or they can jump into the other organization. This is all their individual decision, but as an organization should inform them, should give the notices to the employees well in advance. That's most important. Here it is so unfair if they are giving the information to the employees without telling them. If start selling the organization, it is unfair. It is comes under the ethical aspect. So the ethics to exit strategy is to inform the employees well and before, and make sure that their loyalty here, and try to be convince them and make them compatible with the new administration. Here in the one of the Society of Human Resource Management is studied. In this study, the 48% of employees reported feeling unpaid for sudden job loss due to the company's closure or the downsizing. So, due to the downsizing or the closing of the company, 48% of the employees are reported that it is unfair with them, because they have not got the information as early as possible, they have not treated well while this thing closure time or in the downsizing the organization. This is unfair with the employees. So, in this way, in the as a exist strategy ethics, employee has to consider and inform them well and make them to compatible with all the closure and the downsizing situation. If that sufficient time if they have, they can change the job and they can make the arrangement for further what is that their career. So, this is one. And business associates, the business associates is also here nowadays are not operating directly in the market. These are the people indirectly associating with the organization. For example, here the business associate is an entity such as the organization and the person providing services on behalf of the covered entity. Means here on behalf of the covered entity, these people are providing the services. So, if that covered entity is changing, then automatically these all the service providers will get the problem here. For example, IT consultant, answering services, what is that, collection agencies, these are on behalf of the organization, these people are exist. If that existence itself is transferring to the somebody, then these all the people will get a disturbance. So, what is their agreement with them, whether it will continue or not? If it is not continuing, what way it is not continuing? All the agreements with these kind of the service providers should be addressed properly. Here they should be clear with all the legal procedures and all the procedures to continue with that businesses. So, this is comes in the another legal aspect. Then next is that so, social responsibility of a business while exit the strategy. So, as a exit strategy ethics, here the organization has a social responsibility here. This is in the legal. Legal means all the legal documents has to be clear. Legally, the organization has to transfer the ownership from one person to the another person. They can go with any method here. It is left on them according to nature of business. According to situation, they can go with the transfer to the family member. They can transfer to the non-family member. They can go to the other options. They can go to the employee. What is that option? Employee trust option. That all the options are there. They can go with one or other, whatever they are compatible. But thing is that whenever they are transferring the ownership, they must be clear with all the ethical part of the transfer of the ownership here. The first is they have to give the importance to business associates and they have to give the importance to the employees here. They make compatible to both of them. Then they have a social responsibility here, that legal all the documents has to be clear here. Environmental aspects, whatever the environmental consideration is there, so finding the right person to give it the ownership is the comes under all these things. Because just because of money, if they start selling the business, these are all the points cannot be covered by that person. So, just because of money, we should not sell the business here. The environmental aspect, whatever is there, need to be considered based on these environmental conditions. So, who are performing well, especially in the point of environmental conditions. So, giving it to their hand, our business is good, rather than the person who don't know anything about the business field, who don't know anything concerned about the environmental aspect, who don't know society, who don't know societal aspect, who don't know economical aspect. Because you are transferring your ownership, the reason may be not only the insolvency, in many reasons we can transfer the ownership here. So, the reason whatever is there, but the thing is that whenever we are transferring the ownership, here we have to have a social responsibility, who are really capable enough to sustain that business further, who are able to make that business sustainable one, those should be getted. So, in this way, these are all the social responsibility needs to be considered while making the exit strategy plan. So, these are the sources I have collected the information for the next the exit strategy ethics. Okay. With this, I would like to finish my the model. In this model, these are the aspects are there. You need to read well and prepare for the examination. All the best to all of you. Thank you one and all.